Anytime we're talking about a gap up, looks like GAR up, that means to the previous day high. Anytime we're talking about a gap down, that is the previous day low. Everybody see it? These will be important. You need to recognize them, and we'll use those throughout the day. Well, it doesn't have to necessarily fill at all, but we're looking for this at any point today. It can happen from open to close of the day. At some point, typically it will try to gap up or it will try to gap down. Have you guys all noticed that? So that's a gap up or a gap down. So if you hear me say either one, this is what I'm talking about.
What do you mean by gap? Does that mean like a big jump up or down?
Yeah. Yep.
Okay.
Yep.
Thank you.
Yep. Think of it like a ramp, right? This is the gap, right? You got to jump the gap. So it's trying to do the same thing. It wants to either get right back where it was in either direction. That's a gap. That's all it's trying to do. And why does that matter? Because we all give it relevancy, right? Human beings want to have something in our heads to know. So it's going to be 508 today or 500.
Yes.
Now, because the market is hot, we should anticipate. Now, let's look at this again. We talk about this every day. If this continues to drive up to the pre-market, most likely it's going to want to pull at the open. This is the sell-off before it decides to make a bounce wherever we start to determine support is. Right? So even if today is a green day, if this continues to drive all the way to the bell, now we have an hour. If this continues to drive in the pre-market to the upside, then this is going to pull at the open to get paid. Now, if this drives up and leading into the bell is down, it doesn't necessarily have to do that anymore. There's not a lot to sell to recover the money that was made on the previous day. This is all that happens, by the way. Somebody bought yesterday. They have a run up today. They sell it off. They collect the difference. This is why there's typically a market sell-off at the bell before it then recovers and takes off. This is why I tell you guys all the time, when you've made a ton of money, right, and the stock market is way up, right? It's up 20%. You're like, yay. This is why I'm always like, hey, man, take some money at the open because most likely you're going to get it at another sale. It's going to pull back, which means you could sell it right here at the open. Wait for it to pull back at any point because any point, if you buy it lower than right here, you made more money, right? If you bought it here, hell, up here, doesn't matter. You made more money than just sitting and holding all this, hoping that it finds support and comes back up. Make sense? Well, that's the thing is the gaps we have to determine. Is it a pre-market high gap? Is it a pre-market low gap? Is it a previous day high gap? Is it a previous day low gap? Do you see what I mean? There's multiple ones we're looking for. The reason we're using this one is because it was so clearly defined right here and here. And right now we're just kind of playing in the middle. If you look at this, we are dead in the middle of both of these zones, right?
Yep.
I mean, you can't get any more in the middle. 508 and it's sitting at 504. It's exactly in the middle right now. Everybody see this? I mean, you can't get any clearer than that in the middle. Yep. So again, we'll see what it wants to do. If it leads up into the market open, I would anticipate a pullback, waiting to look for support. It does not mean it's got to come all the way to 500. It does not mean that at all. What it means, though, is if it comes to 500 today, watch for a bounce. If it doesn't, you already know to hammer those puts. If it runs up to 508, you already know most likely that's resistance. It's going to want to pull back. If it breaks and holds above, you're going to hammer calls. These are critical areas that you need to know today. You need to know exactly what to do with them, why you're doing what you're doing with them, what your stops are going to be, and the reason why you're doing what you're doing. So right here, if I got in at a 500 and it broke and held to the downside, I know my stop is just above 500. Scalpers, this is a scalp trade only. If I get into a call and it breaks above 508 and I get in on this, I know my stop needs to be right below 508. Scalpers only. If you're in a 2-minute EWO, you follow your own rules. Has nothing to do with what we're talking about. But you know, if it gets to this level, this is probably going to be a good range to start to offload some of the weight you're carrying, shedding 50, 20, 20, 10, right?